After mentoring several traders, one thing I realized that most of them was battling with without them even knowing that this was the reason why they had inconsistent results was because they didn't understand the market structure. Yes, I know every trader knows what a market structure is. They believe they do. But in actual terms, most traders don't even understand market structure. That is why a lot of traders are unable to say the market is going to go to the upside or to the downside, and they now put all their faith in an indicator or whatever pattern that they're trading. And in this video, I'm going to share with you a very simple example of how I use the market structure to anticipate for a price movement from a key level, mitigating my point of interest, and I anticipated for price to sell off from that key level. And in this video, we're going to be using British pound, Japanese yen as a point of reference for this analysis. And if you've been watching my videos, you can actually see, I think that was the last two videos I made. I talked about British pound, Japanese yen, and I talked about my analysis and how from the 12-month time frame we were bearish, and I talked about my anticipation for GBP/JPY to potentially go to the downside. And right here, because 12 months bearish, monthly bearish, low resistance liquidity at the overall low here, weekly overall structure bearish as well, and daily has broken structure to the downside. And if we scale down, and we can see basically this was the key level. I outlined this key level in that video. If you missed it, I would recommend you watch that video. I outlined the key level here, and I said it's either we'll mitigate this key level or price could want to run liquidity here. But don't forget, this key level, we have high resistance liquidity. So if I want to sell from a high resistance liquidity. So this aligns pretty much nicely to be an area for a sell-off. And look how nicely price just tapped into it and sold off. Why did I know that this was going to happen? Because I understood the market structure from the 12-month time frame, and I was able to align it with monthly, weekly, daily, 4-hour. This is, I keep saying this, and I know some people might be tired of hearing it, but this is, in my opinion, the holy grail in trading: having a plan. If you find it difficult following your plan, write it down on the chart. You can see every single time I write on my charts, I tell this to all the people I mentor: write it on your chart so you don't forget it. The criteria for a sell trade: 30 minutes break of structure, and you look right there. Can you see a 30 minutes break of structure? Yes. Was there a displacement? Yes. Was there an inefficiency? Yes. Did it mitigate a premium? Yes, it did mitigate a premium position. If we use the Fibonacci from this low to this high, this is equilibrium. Anything above it is premium. Did we mitigate premium? Yes. Sell at premium. The overall long-term trend is bearish. Next, drawn liquidity, low resistance liquidity. If you found this insightful, give it a thumbs up or follow me for more insights. I'll see you in the next one.